couple quarters.
Jassy, Steph, characterizes it as the age-old Amazon story, which is the choice between optimizing for short-term profits versus what's best for our customers in terms of the cost that they are about to incur. He also points out 39% growth in AWS, which is, of course, their cloud business and a profit machine, which does show that is still kicking into high gear after Microsoft showed some strong cloud strength. What do you make of it?
Yeah, so we headed into the print. Stock was only up 6% in the year. It was a laggard, as Deirdre said, because there were concerns about e-commerce slowing down, very difficult comparisons, and an investment cycle, right? They're having higher spend. They have to spend on wages. They have to spend on people. They have to spend on the supply chain and logistics. So they're not immune, right? And they're going to spend, and that's what they should do. But that's why the stock has lagged. On the positive side, those are great AWS numbers. They really are. I was thinking 35%. They did 37 last quarter, and I think the whispers were 35-ish. So 39% growth, that is terrific. They are so much bigger than Microsoft and also Alphabet in terms of the cloud business. So this is really encouraging to see. We know that Microsoft grew Azure at 48% and Alphabet at 45%. So this is right up there with them, too. And again, as I mentioned, they're much bigger. So I think it's going to be fine. I think we have to get through this quarter or maybe even next quarter. Maybe it's the 2022 story as the investment spend starts to subside.
Delano, your take?
I would echo the rest of the panel here. I think the big thing I was looking for is the offsetting of AWS growth versus some of the challenges they might be facing in the e-commerce business. I do think the e-commerce story does come back over the holidays and past into 2022. So I think that's something to focus on. So investors may see an opportunity here. But yeah, the numbers for AWS is a strong suit here. It's obviously not offsetting what's happened in extended hours after the print. But that was kind of the big opportunity I was looking for. They guided in last quarter, they guided lower on revenue. They kind of said on the low end, they might look at $106 billion. So this miss versus the street is obviously disappointing for investors, but we were kind of expecting something slower on the side of just overall top end revenue. But I think in general, I'm going to be looking at AWS numbers as well as how e-commerce can rebound looking over the holidays, Wolf.
Yeah, and also those $1 billion that they're going to incur in costs related to wages and supply chain. Let's get back to Deirdre Bosa, who has more color from the report. Deirdre.
Yeah, I'm looking through some of the segments, and I'm seeing cloud. That came in better than expected at $16.1 billion, 15.5 was expected. So a good beat there. We also saw Microsoft beat in terms of Azure also. Here's where we saw a little bit of weakness, missing expectations, online stores. So this is Amazon's e-commerce business. Remember, coming off that really high base during the pandemic, that came in at just under, a shade under $50 billion. 51.4 was expected. Looking at other revenue too, this is where the high growth advertising business sits. That was a little bit light too. The street was expecting $8.3 billion. That came in at $8.1 billion. Also, another nugget that kind of stood up to me, guys, it's workforce. It grew just 30% in the quarter. That's coming down from about 50% growth in the last few and 60% growth in the last few quarters sequentially. So we'll be sure to ask about sort of labor challenges in the space. And also, this will be important because it's going into the holiday season, and we know that Amazon needs to hire many seasonal workers. We'll continue to dig through this and bring you anything else we see.
Deirdre, thank you. We'll get back to Amazon in a moment, but we've got Starbucks earnings also just out. Kate Rogers with those numbers. Kate.
Hey, Sarah, looking like a mixed quarter here for Starbucks. Q4 adjusted EPS coming in at $1, driven by strong U.S. performance. That's a 1 penny beat. Q4 revenues, $8.15 billion for the quarter. That is a slight miss compared to analyst estimates of $8.2 billion. Global comps up 17%. That's a miss versus 18.3% estimates. U.S. comps up 22% for the quarter with 11% two-year growth. That's a miss versus 23.4% analysts were expecting. International comps increased by 3%. That's also a slight miss compared to estimates of 4.1% gains for the quarter. Now, China, its second home market, comps decreased 7%. It did have a 17%, though, increase for the full year because Starbucks is also reporting its full year earnings in this quarter. Digital as well. U.S. rewards members, 25 million now. That's up 28% year over year. The stock is down just slightly now, guys. Back over to you.
Down just slightly now. It's jumping around, though. It was down 2%, was briefly positive. In fact, they're all jumping around after earnings, including Amazon, as we know, which is currently down 3.5%. And Gilead is down a couple of percent. Meg Terrell's got their numbers.
Hey, well, if it looks like a big beat and a raise for Gilead in the third quarter on the strength of remdesivir, its COVID antiviral drug. Earnings for the third quarter coming in at $2.65 versus analyst average estimate of $1.75 a share. Revenue was $7.42 billion versus the average $6.3 billion estimate. Veklury sales, that's remdesivir, came in at $1.9 billion versus an estimate of like $630 million. So just blowing that out of the water, the company raising its full year forecast across the board, and especially for Veklury sales, now saying it expects $4.5 to $4.8 billion in sales from that drug, primarily reflecting what they say was a surge in COVID hospitalizations in the third quarter of 2021. But they do say they expect a significant step down in hospitalization rates in the fourth quarter of this year, guys. So good news in the pandemic, bad news on Gilead's drawing revenue from remdesivir. Guys, back to you.
Meg, thanks so much for that one. Delano, I'll come to you. We've had Starbucks as well, which is now down 1.4%. What's your take there? And more broadly on these three quite high-profile stock decliners in after-hours trade?
Exactly, Wolf. And I think the biggest thing I was looking for with Starbucks is the input costs and how those wage increases. Remember, they're guiding higher for their average hourly wage increases. So that's something they're going to move up in 2022. I actually was really focused on the digital numbers. So if you go into a Starbucks store, there are higher amounts of digital online orders, which may increase efficiencies over time, right? But the big thing was those same store sales numbers came in a little bit lower than projections. And I think if you have that, as well as higher input and higher costs, you're going to compress these margins, which I think has really been reflected in the stock over the past several months. So I'm still holding. It's a smaller position. But I wouldn't be adding here at this time, Wilf.
Delano, thank you. Steph, also thank you so much for the Market Zone participation. We will see you again, though, shortly when Apple numbers cross part of the All-Star panel later.